his data points are amazing. And I always found that I learned something when I talked to Samit Vartak. He's founding partner and CIO of Sage One Investment Managers. Joins us right now on the show. Samit, great having you as always. Thanks for taking the time out.
No, it's my absolute pleasure, Niraj. After a long time.
Yeah, it's been a long time, and both Hiral and me look forward to talk to you. Samit, are you calm right now? Because I think it's difficult with the extent of news flow. When it comes to investing, is it calmness, or are you also a bit anxious about what is the impact of the various developments happening around us?
Yeah, I mean, it's not that easy to be calm in this environment, but I think the good thing is, it's always a good time when there are so many worries around. I think the kind of worries that we have is, in terms of earnings slowdown, there are uncertainties related to tariff and then geopolitics. So India is sort of bombarded with so many of these worries, and we have underperformed. I mean, last 1 year we underperformed some 26% compared to the emerging market. I mean, so that's always a good time to find opportunities. And I think there is no dearth of opportunities. Maybe some concern about valuations, but if you're looking for great businesses, high growth businesses, I think there are plenty available. So that always keeps you excited.
Right, Samit. Good morning, Hiral on this side. Plenty of opportunities, as you say, that are available in the market right now. The way we've seen markets now starting to probably see some bit of sunshine yet again, where would you start looking at? I mean, which sectors would be on your priority list?
Right. So, yeah, again, I think if you start looking at top down, it's very difficult to find, broad opportunities across all these sectors. I think that time is over. If you see the last, 4 years or 4 or 5 years post COVID, there has been indiscriminate rally across many sectors. So whether it's cap goods or defense, PSUs, anything to do with government. And I mean, which is also reflected, in the broad baseness of the rally. I think last year or so has been very different, where there are only few pockets which are doing well. So I think this is a time for. I mean, anyways, I am a bottoms up stock picker. Very difficult to find sectors, but there are opportunities in data centers. There are opportunities in battery storage. There are opportunities in smaller defense companies which are emerging right now. There are niche building materials which are which are emerging, and these are not probably in the large cap space that you are able to find, because large caps are so well found and already tracked so well. What has happened in the last few years is that for the first time, a lot of really talented entrepreneurs have received risk capital, which wasn't available for a lot of Indian entrepreneurs, right? So there are entrepreneurs who come in for the right reasons. Some come in for just taking advantage of the equity flow. But as an investor, it's your job to identify those entrepreneurs who are sort of getting the risk capital, and then they have this opportunity to build a great business. So there are many of such businesses available in the spaces that I spoke about, which are newer emerging spaces. These managed spaces. Or
Samit, who have you identified right now in the last couple of months who you would look at? Because your strategy has been clear: 20% plus earnings growth potential. You're talking about 25% plus compounded earnings growth is what you focused on as well in the past. What is your? I mean, who have you picked right now?
Right. I mean, there are many of these, and unfortunately, I can't go to the, because talking about a specific promoter means sort of talking about that specific company. I'd avoid that, but some of the data is available in the public market. The kind of investments that we have done in the the office space, or the data center space, or the defense space. I also have done an interview, with the promoter on this channel, and I think these are the businesses which have great opportunities. And again, I may give you a certain name, but again, by the and then people blindly buy it, and if I exit, there is no way I can communicate to the investor. So generally, it's not that a great an experience for myself as well as an investor. But I think investors who really follow closely probably at least can identify, few of the smaller opportunities that we are able to find.
Samit, is the portfolio largely tilted towards domestic exposed businesses because of all that's happening globally, or are you now sensing an opportunity in the globally exposed sectors, because some of them, because of this whole tariff tantrum, have come off over the last 6 months?
Yeah, see, I mean, we haven't really taken any top-down call of, staying away from export-oriented companies. It's completely bottoms up, so, but yes, you are right. I think almost 90% plus is domestic oriented. There are one-off export-oriented companies which are more into, CDMO or chemical space, where we are comfortable, because their exposure to US is limited, but also that we would believe that those smaller niche opportunities would never be manufactured in the US. So I think they will have minimal. But yes, Niraj, overall it's completely dominated by domestic themes, because that's where the earnings growth is coming through.
Okay. Uh, Samit, there is a emergence in the last 4 or 5 days, and I literally mean 4 or 5 days, of this whole rare earth opportunity. And I call it a rare earth opportunity because there is a mining bill that has been passed which will allow private mining, and I would presume some bit of it has also been done to explore the rare earth opportunity at a fast pace. China has opened up some of those curbs, presumably. That might help some of the end users as well. So therefore, in that whole gamut, have you guys done any work? And do you believe that there could be potential beneficiaries, because that road was closed until a few weeks ago?
To be frank, we haven't really done too much work.
I hear you.
But it's an exciting space, and I think there will be a big time gap between now and when really things start happening. And we would rather be a little more sure, because there are too many uncertainties right now regarding that. There would be uncertainties related to sort of the tariff, geopolitics, and also the probability of we really commercially mining those rare earths. We don't know a lot of those things, and taking a bet at this moment probably is a little too premature.
Okay, the other thing, Samit, that I have in mind is that because the government has done this whole GST cuts, we already know that the Reserve Bank of India cut rates. That helps, buying as well. What within the consumption basket would you be most constructive on, if you are constructive on consumption?
Yeah, see, I'm not 100% convinced on whether these kind of boosts will really make a, huge difference to consumption. Yes, of course, there would be some, like for example, if there is, GST cut on the auto side or two-wheeler side, I'm sure there will be a big boost. We are playing that through auto ancillaries, especially EV-related auto ancillaries, something that we really like. Overall consumption, I think, depends on the product life cycle too. So, for example, if post-COVID, because of working from home, if people have already bought, say, dishwashers or, ACs, they do last for, 10, 15 years. And just because the prices have come down, and is not, people are not going to rush to buy those. And anyways, we don't know. I mean, whatever savings, whether they, because of the tax cuts or because of RBI sort of loosening the policy, whether they'll spend it on consumption, whether they will come to the stock market, whether they will go somewhere else outside of India. We don't know about that. Because in the last post-COVID era, there has been huge wealth which has been built, across investors, and I don't think we have seen that big a boost on consumption at all. So just because there is more money flowing into people's hand, it's too uncertain to know. I mean, the if you look at the last quarter, the retail growth was low single digit. The FMCG was low single digit.
Correct.
So even if the low single digit comes to high single digit, that's not good enough.
Absolutely. The base is low and growth from there. In fact, your second quarter itself potentially could be weak, taking into consideration the purchases that could be deferred, from a consumer durables or even the auto consumption pack as well, because the GST announcement is only expected in October. So the high value purchases probably could be deferred as well. So this is going to be a space we should be watching out for pretty closely. But thank you so much, Vartak, for joining us, Samit Vartak, for joining us on the show and sharing your views and the way you're looking at, building materials is one of the sectors, Niraj, that he spoke about. And I think Shankara Building Products is a company that Sage One has invested in as well.